A very good afternoon to you. Let's take a look at the markets. Asian markets closed mixed today with an upward bias. This as President Donald Trump indicated that the levying of tariffs on the EU would be postponed to a later date. The Nikkei share average rose by 1%. The Hang Seng index declined by 1.35%, while the Shanghai Composite Index closed down 0.05%. US markets ended last Friday in the red. This as sentiment was weighed down by trade tensions as President Donald Trump proposed a 50% tariff on imports from the European Union, effective from the 1st of June. Although the latest word now is that that date has now been moved to a later date sometime in July. Trump also threatened a minimum 25% tariff on Apple products if the tech giant fails to relocate iPhone production to the United States, causing Apple shares to drop by 2.4% on the day. The Dow Jones Industrial Average declined by 0.61%. The S&P 500 ended down 0.67%, while the Nasdaq Composite Index closed 1% in the red. Looking at local indicators now, the all-share index is up currently 0.5% at 93,995 index points, just shy of 94,000 index points. The rand is trading at 17.86 against the US dollar, 20.33 vis-a-vis the euro, and 24.22 against the British pound. In terms of commodities, we see that gold is trading at $3,332 an ounce, platinum at $1,085 an ounce, while Brent crude oil is trading at $64.72 a barrel. All right, let's get into conversation now with Gary Boyson. He's a portfolio manager at Rand Swiss. A very good afternoon to you, Gary. So President Donald Trump has threatened heavy tariff duties against the EU and even American company Apple, with market anxiety ratcheting up all over again. How are you seeing things, with a particular focus on Apple, if you don't mind?
Yeah, so I think looking at it, we are in a quiet day today because we've got obviously the Memorial Day public holiday in the US. We've also got the spring break holiday in UK. But overall, last week we obviously had the idea that potentially we could see a 50% tariff on the EU as soon as the 1st of June. And after discussions over the weekend, a very positive conversation with the President, it looks like that's been pushed out to the 9th of July, which is waiting for the typical 90 days that we've all heard about was going to expire. Treasury Secretary Scott Bessent has said that this is really to light a fire, and it does look like part of the deal again, kind of be very aggressive initially and then try and get concessions. The EU has prepared a package of countermeasures already in terms of tariffs, specifically including Boeing, which seems to always be a beneficiary of these trade talks. Apple, a little bit of a different situation. Of course, regulation on the big tech companies, it's always critical, but Trump also saying that Apple might need to pay 25% tariffs on any iPhone sold within the US that are manufactured outside of the US. And of course, Apple is in the process of moving its manufacturing base to India, which the White House said that's absolutely fine as long as you're planning on selling those in India, and clearly wants the manufacturing to move domestically. The issue around that is that the US just doesn't have the skills at this stage to do that kind of transition in terms of manufacturing very quickly. So we'll see how it plays out. But if the track record that the White House has at the moment is anything to go by, it's big headline-driven news announcements, and then almost very aggressive to start with, and then a more practical situation does ultimately result. It depends. We have seen Apple share price under pressure on the back of this, but I think it really is going to depend on how the negotiations between Apple and the White House.
Yeah.
Apple is, I suppose, the size of a small country at least. So it's not surprising to see them being targeted individually.
So, Gary, when you do respond to the next question, do try and project a bit more. Your sound is not that perfect today. So the local market appears to be firing on all cylinders. It's flirting with 94,000 index points. It's basically, shy of 5 points from that. How do you think that we've managed to buck the trend? And where do you continue to see value?
So at the moment, 94,000, we're looking at all-time highs in the local markets. Now, part of that is being driven just by, underlying fundamentals. So Citigroup, for example, raised their target price to 54 euros on Prosus. Prosus is a huge component in our index, and that's helping to lift the market. At the same time, we've seen Sasol settling dispute with Transnet today. That sent Sasol's share price up 8%. Richemont, also a very, very important component of our index. Obviously, luxury goods manufacturer. Luxury goods, we have been under pressure with the idea that there'll be less travel, less trade between nations, are starting to improve as well. So you've got a lot of tailwinds for this. Of course, our local gold mining sector also doing exceptionally well with the heightened uncertainty. That's helped to lift our market. And if you look at our banks, also a significant component of that index that you mentioned, they are relatively cheap compared to the developed market counterparties. So it's, I think there's a good argument for why the index is where it is at the moment, and really surprisingly driven by fundamentals. So they're happy to see positive markets today.
So, of course, this week we are expecting the Reserve Bank to make a call on interest rates. What do you expect them to do? Any chance that we could get a rate cut?
So there's a fair chance that we're going to get a rate cut. So looking at market pricing, it's expected that there will be no change. So repo rate stays at 7.5%. But the rand is a lot stronger than it's been. Inflation is very low at the moment. And there's a good argument to be made that the risk premium on South African assets is actually decreasing, which does give the SARB room to cut. Now, there was a poll done by Reuters on Friday, and that actually says that there are 13 economists in favor of a cut and only 7 in favor of no change. So, if you look at what the pollsters are saying, we should actually get a cut this week. Market pricing is saying a very different thing. Now, part of that is both National Treasury and the Reserve Bank have been discussing the idea of reducing the inflation targeting framework to a single point. So saying instead of that 3 to 6% band that we aim at, just aiming at 3% altogether. Now, some of that is already priced in, but if that is the case, then you would argue for no rate cut at all. As far as the opportunities are concerned, it's the usual sectors that will do well in a low interest rate environment. So you can definitely think South African retailers, the likes of Mr. Price, the likes of Fashini, Truworths, some of the grocers as well. And of course, our real estate sector will also benefit in the short term of a rate cut. So yeah, let's hope we see it. Market is still saying we're not going to see it, but economists are not in favour.
All right, we wait to see. Thank you so much, Gary, for your time and your insights there. That was Gary Boyson. He's a portfolio manager at Rand Swiss.